Welcome to Market Call here on BNN Bloomberg. I'm Paul Bagnall, sitting in again for Andrew Bell. Thank you so much for tuning in. We've got a good one for you today. Kim Bolton is, of course, an expert in tech stocks, and he'll be talking about tech stocks through the course of this program. He is president and portfolio of Black Swan Dexteritas. Tech stocks are his specialty, so get your questions ready. Here are the coordinates, how you can get to Kim Bolton and put a question to him. Our toll-free number is 1-855-326-6266. Our email address is marketcall@bnnbloomberg.ca. So get those calls in. Lots of opportunity to put a question to Kim Bolton. In the meantime, we will speak with Kim right now about his market outlook and how his fund is positioned. Kim, we've seen a great deal of emphasis on growth in the market recently. You've talked about the peak growth narrative in the market. You said recently that there are as many arguments in favor of a continued rally in markets as there are for a more bearish case. How are you positioned given that backdrop?
Yeah, thank you very much, Paul. Nice to be back on Market Call. In this environment of, equity market pros and cons, we positioned the BSD Global Tech Hedge Fund with the expectation of definitely more market volatility. And we certainly had that over the last few months, and pretty sure you're going to have this going forward. So right now, we're sitting with about 87% invested across a couple of dozen tech vendors and tech end users. And we have about a 61% short equity indice overlay or hedge on the invested stock portfolio. And that's, that hedge certainly protects the stock portfolio from, if the market were to deteriorate. But we have these laddered sort of NASDAQ put options. So if the market does deteriorate, that hedge will sort of incrementally grow as the delta on those put options starts to grow.
How much upside are you missing, or potential upside are you missing by putting those hedges in?
That's a great question, Paul. It's like an insurance policy, and of course, insurance policies, cost something, have a premium to them. However, the beta, or the degree of movement in the stock portfolio, is greater than the beta on the hedge. So as the market continues to melt up, we definitely make money. Maybe not as much as the NASDAQ, but our benchmark is chosen by the Ontario Securities Commission is a 50-50 NASDAQ Russell. So it sort of gets both sides of the cyclical and the growth play. So we lose a little bit as we don't lose. We don't make as much when the market continues to melt up, but we're certainly protected on the downside. And certainly if the market deteriorates, I would say more than 5-6%, that hedge actually contributes and makes money for the fund.
We'll talk individual stocks, of course, through the course of this program, but are there sectors of the tech, are there subsectors of technology that you are particularly bullish on right now? Are there subsectors that you're particularly bearish on right now?
On the bullish side, we're overweight within the semiconductors, both between the foundries and the designers and the integrated manufacturers, both, when it comes to the memory and also the analog side. But we're also overweight within what's sort of become known as the cloud stack. So, we have the infrastructure players of, from the Amazon to the Microsoft and Google, but then you also have the platform players in there that allow users to actually use the various infrastructures, and then built on top of that are the software as a service. So that stack of the cloud is something that we're very much devoted to. If there's an area that we're underweight, I would say perhaps on the gaming side, we're underweight, and maybe sort of neutral weight when it comes to the social media.
Okay. There is Kim Bolton getting us launched for a Market Call episode in which you will put your questions to him on the subject of tech stocks. Here's our number one more time, 1-855-326-6266. And our email address is marketcall@bnmbloomberg.ca. We'll begin with the questions right after this.
Oh, okay.
Welcome back to Market Call. Kim Bolton is our guest. He, of course, is a specialist in the world of technology stocks. He's with Black Swan Desteritas. We're going to go to our email inbox for the first question. Our first email writer is Nora. The subject is Facebook, a well-known stock to say the very least, ticker symbol FB on the NASDAQ. Her question is a simple one. What is your current opinion of Facebook, Kim?
Thank you, Paul. I'd actually maybe refer to myself as a student of the market because there's always so much incoming information. But Nora, when it comes to Facebook, they just reported currently trading just like over $350. We have a price target of $380.25. So Nora, Facebook has it's interesting. It's gradually evolved from a social media pure play to a critical outreach platform for small, medium-sized business through tool offerings such as personalized ads. And remember that 99% of Facebook's revenues are from advertising. But it was interesting what Mr. Zuckerberg was talking about as sort of the next e-commerce generation for Facebook is into this thing called the metaverse, and I'll sort of use a quote from Mark Zuckerberg. Metaverse is a virtual environment where you can be present with people or businesses in digital spaces. So it's really getting into that virtual reality. But it's going to take a long time to actually get there. Facebook remains attractively priced. It's growing at 25% CAGR and priced at 9 times sales. But future eyes will be on Facebook's deceleration in user growth. This is why I actually sort of rolled over a little bit on the earnings because, in North America, user growth was flat, but over in Europe, it was actually declining. So Nora, I'd suggest, we're sitting around 350. If you can pick up Facebook between sort of $275, $325, I think you'll do very, very well.
Okay, thanks for the question, Nora. David is our next email writer. He also is writing about a very high-profile stock, Microsoft, ticker symbol MSFT on the NASDAQ. His question is as follows. Would Kim buy Microsoft at the current price? It recently reported good quarterly earnings, but surprisingly, the stock price fell somewhat. Thanks very much for the question. Microsoft, we know this thing inside and out, and it's actually in one of our top 5 holdings. Currently trading, I think, around 286. We have a price target of 313.25. But sort of as an example of these mega cap tech stocks. In the current reporting, sort of Q2 reporting season, a lot of these companies gave a little bit of warning. I wouldn't say a lowered guidance, but they were warning because, as I mentioned in the beginning, we're in sort of the peak growth. It doesn't get much better when you do comparisons to a year ago. But, as you go forward, the comparisons are going to be a little bit different. But, Microsoft, it continues to demonstrate that uniqueness of its enterprise IT reach and positioning with its Azure, which is on the cloud side, and the server and tool footprints and so on. The market's reactions to Microsoft's, Q2 calendar or sort of its Q4 fiscal year earnings was sort of relatively muted, and a lot of analysts would say that Microsoft had a sort of mixed quarter. We expect Microsoft's earnings to rise in the near future, but probably at a slower rate than the growth expectations implied by its current valuations. So, in other words, bottom line. I'd hold on to it and definitely buy it on dips. Okay, let's go to Michael in Montreal, who is the first caller on our program today. Michael, thanks for your call.
Taking my call today. My question pertains to the stock Teladoc, ticker TDOC. I was wondering if I can get your opinion on this particular stock.
Thanks very much. Teladoc, we don't own it in the fund, but we have a number of separately managed accounts where the investment policy statement for the investor just doesn't fit exactly within the fund. So we actually have these separately managed accounts whereby we do have actually Teladoc in a few of those. So price target we have on Teladoc is 166.85. Teladoc Health, it provides a platform for people to get health care from a variety of health professionals, including mental health care providers and specialists. It went public back in 2015. It was founded actually back in 2002. And it's grown its revenue significantly. It is the leader within this category of sort of med tech. The revenues are up 32% in the past year alone, although it's volatile, and probably the main reason this is one of those companies that is yet to be profitable. So, its stock price has skyrocketed over the last 12 months. It's made a number of acquisitions. It just completed, earlier this year, a merger with Livongo Health. So we still like it. And our price target there is 166.85.
Okay. Peter in Vancouver is our next caller. Peter, thanks for calling.
Show as usual. Oh, Kim the Great, we miss you. Last time you're on is in May. Too long. My idol. Thank you for keeping recommending, Asana, ASAN, it was your topic in the low 20s, and now it's $71. What to do with it now? Thank you very much, my idol.
He's a
nice
fan.
to hear your voice. Nice to hear your voice, Peter. Paul, you just got to help me with it. Where's it trading right now?
I'll find it for you.
And then I'll just sort of talk a little bit about Asana. Asana is one of these companies that is a leader when it comes to collaboration, work management space. And it has a lot of competition, really good competition, with the likes of like Slack that was just picked up by Salesforce. Atlassian, the Aussie company, has done very, very well, and Smartsheet. But Asana aims to provide clarity at sort of every level of an organization, from the individuals, the team leaders, managers, executive, and it uses we at Black Swan Dexteritas actually use Asana, and it definitely enhances our productivity and increases accountability. We don't own it currently right now. Paul, did you find it there?
Trading now, Kim, at $72 and change in New York, $72 and change. That's very close to a multi-year high. I believe it's very close to an all-time high, but not quite there. It's gained 144% year to date.
Yeah. So
big run up since May.
Yeah. So we actually sold it down at $70.50. As it was just a sort of approaching price target. Phenomenal company, great leadership. You'll recognize the co-founders of Asana. They're Dustin Moskovitz and Justin Rosenstein. They were the fellows that were in partnership with Mark Zuckerberg back in the days of the Facebook. I definitely like the company. We use it, but it's rich. it's certainly rich and well-deserved. Peter, I hope that helps.
We'll leave it there. We'll leave it there for now. Thanks to Kim for his answers. Thanks in particular to our questioners. We'll take a break and be back with more questions to Kim Bolton after this. 1-855-326-6266 is our number. Welcome back. Nick Bolton is our Kim Bolton, I should say, is our guest. He's with Black Swan to stare at us, taking your questions on tech stocks. And Nick in Montreal is our next caller. Hi, Nick.
Good afternoon, Paul and Kim. Thank you for taking my call. My question is on Adobe. I'd just like to know if you can talk about the management team as well as the share price, and if you would hold this as a long-term investment. I'll hang up and listen to your feedback. Thanks again. Bye.
Thanks for your call, Nick. Adobe. This is another one that we have about a 1% position, but we actually had it up to about 3.5%. It's trading $622 right now, and we have a price target on Adobe of $631. So when it gets within sort of that 5, 6, 7%, we start to take some profit on it. So Adobe. Great management, which actually trends into great execution of their business model. So, this is the poster child when it comes to one-stop shop for product design and content creation, marketing, web, mobile, commerce. And you got to love this company when there's actually a verb named after the company called Photoshop. That it's really sort of connected with everyone. They did a fantastic acquisition in Magento a couple of years ago. And they've they have a net profit margin of 40%. But I would say the three most important reasons of why we like this stock. We'd love to see it actually on a pullback so we can actually build a position back. But the three most important reasons we own the stock is while the historical earnings per share growth rate for Adobe is 52%. Investors should actually focus on the projected growth, though. The company's EPS is expected to grow at 25% this year and crushing the industry average, which is about 10%. So secondly, the year-over-year cash flow for Adobe is 27.5%, which is higher than the industry average of about 8.5%. And thirdly, the current year earnings estimates for Adobe have been revised upwards, and there's a strong correlation between the trends in earnings estimate revisions and near-term stock price movements. So it's probably why it's up where it is. And it's just executed their business plan marvelously.
Okay, thanks for that question and answer. Andre is in Chilliwack, BC. Hi, Andre.
Morning. Thanks for taking my call. Kim Bolton, what a great sector to be in. Every company that's been mentioned, I would wish I could buy, but not possible. My security, please, is on NVIDIA. What do you think of the $40 billion takeover of ARM? And would you be a buyer of it at about $200? Price target's going up to $250. Could I hear your take on NVIDIA? Thank you.
Yeah. Thanks very much. Okay. NVIDIA. So this is one of the semiconductor designers. And so you have three parts to sort of the semiconductor ecosystem. You have the foundries like TSMC. Then you have the designers, and definitely NVIDIA is a leader within that. And then you have sort of that integrated manufacturer side, and a good example of that would be like a Micron, who the integrated manufacturers do both the design and they actually manufacture the wafers and the chips. But NVIDIA, it remains one of the greatest secular growth stories in the semiconductor business, riding, the major tailwinds, including the transition to the GPU and the data center, gaming, edge computing, autonomous vehicles, AI, and so on. So NVIDIA's cloud business should see continued secular strength over the coming years as the GPU penetration in the data center increases and the workloads of the GPUs expand in the data center. Now, the acquisition of ARM puts NVIDIA in a very enviable position of strength to lead that sort of AI revolution in the years ahead. It expands NVIDIA's technological strengths into ARM's enormous ecosystem, could be a game changer for the whole company and the industry itself. The valuation is reasonable, and the deal would, immediately be accretive to NVIDIA's gross margins and earnings per share. It's still in the crosshair of the regulators out there, particularly out of the Chinese. We have taken a bit off the table here, but you mentioned price target of 250. We still have our price target at 215 to 220. I hope that helps.
Okay. Thanks a great deal, Andre and Chilliwack. Thanks to Kim for his answer. We'll take a break. When we come back, we'll take a look at Kim's past picks. Welcome back to Market Call. Time now for Kim Bolton's past picks. Kim visited with us on August 19th, 2020, a little less than a year ago. His first top pick on that day and past pick number one today, Twilio, ticker symbol TWLO on the New York Stock Exchange, trading then at $251 US, trading now at $367 US. That's a share price appreciation and a total return of 46%. Kim?
Thanks. Twilio. So we don't own this in the fund, but we do own it in a number of our separately managed accounts. So, so it's sort of just shy of $370. We have a price target on this of $460.75. So it still has a decent runway ahead of it. You're probably asking why we don't have it in the fund. Well, we normally hold a couple of dozen to 30 stocks in there, and there's just so much room. But Twilio, this is again part of that cloud stack. Cloud offers cloud communication platform to its clients. So the client's developers then use the APIs, the application programming interfaces, and other software tools designed for specific use cases to developing in-app communication mechanisms. Now, these communication systems are then used by the client to in turn support their customers at various stages of the purchase cycle. So Twilio handles both higher level communication logic for almost all types of consumer engagement. It has this software layer called Super Network, and it's been designed to communicate effectively with all the connected devices globally. So I could carry on, but basically on the valuation side, like many of these high growth stocks, they're at all-time highs, trading at like 27 times trailing sales. But what needs to be kept in mind, though, is that there is likely to be permanent demand uplift that accrues to Twilio's business, which should see higher revenue growth for an extended period of time. So it has a great long runway for all kinds of use cases like multi-factor authentication, e-commerce support, on-demand healthcare, and so on. So Twilio's had blowout second quarter results. It had 67% organic revenue growth. Now, I would recommend So, trading what about 367? If you can pick it up under 350, it would be a bargain, and that's where we're sitting. Thanks, Paul.
Okay. Fastly is past pick number 2, recommended just under a year ago when it was trading at 79.34 US, now trading at 45.21. This is a drop of 43% on a share price basis and a total return basis. Fastly.
Yep. So I'll tell you what they do. They're also involved in that stack, but I'll tell you what we did. So we recommended, a year ago when it was trading at 79, we said, if you can pick it up at 75 and then sort of add down in the low 60s, which we did, but we also had a stop at 55. So we got stopped out in the middle of last June at 2021. So sometimes it works and sometimes it doesn't, but you have to have a discipline around where you're going to enter and also what your price target and a stop on top of that. So Fastly. And actually, it'll be interesting today because they report tonight. And for those that own it out there, there are some key metrics that you got to watch when they come out tonight, which we'll be watching. We're pretty sure that the revenue growth may be slowing, but also look out for the enterprise customer spending and watch for net revenue retention and also gross margins and what they're doing in the CapEx. So this is sort of a little backwards, but I'll tell you what they do. Fastly is an American cloud computing services provider. Fastly's Edge Cloud platform provides content delivery network, internet security services, and load balancing for both video and streaming services. You may have heard about this whole thing about edge computing. This is the sort of where they play in out on the edge rather than back in the server. But they've just struggled in the execution of it. So that's what we did. Watch it for tonight. Okay.
Thanks, Paul. Number 3, we may need to move fairly briskly on this one. A well-known company, Intel, INTC on the NASDAQ, trading then at 48.33, trading now at 54.05, a return of 12%, and include the dividends, a total return of 14%. Kim?
Yeah. So Intel, this is going to be a really interesting one this year and certainly next year. Intel just revealed an aggressive new roadmap that promises significant performance and efficiency improvements up to 2025. To do this, it's laying the groundwork of new ranges of products. And they just announced the first new transistor architecture out of Intel in over a decade. Although some will be skeptical if Intel will actually be able to put this roadmap into production at the time when Intel says it will do, it should be very, very clear to all the listeners that this is a roadmap that will unquestionably leapfrog Intel over TSMC. But it's all about the execution. And they got the guys that do it. So the new guy that came in, Pat Gelsinger, has brought in very, very strong executive and engineering leadership. So we have about a 1.75% position, currently trading at 54, 12-month price target of 64. But I think this is going to be a really interesting company over the course of this year and next year. Thanks, Paul.
Okay, that's Kim Bolton on Intel. Let's take another break, and when we come back, we'll get back to your questions for Kim after this. Let's get back to questions to Kim Bolton. Sandy is in Ottawa, and Sandy's our next caller. Thanks for calling.
Hello.
Hi, you're on the air.
Hello.
My question is,
great.
what's the difference between GOOG and GOOGL? Google, which one should I buy if Kim thinks that is worth investing in that company? Thank you.
Thanks very much for your call. So I would definitely recommend investing in Google, GOOGL. The other one is actually the voting share one. And the only reason I say the former is that there's a lot more liquidity, although, there's decent liquidity in the other one. But so I would definitely, we own Google. It's in our top 5. It's finally caught up. They had very impressive performance on both the top line and as well as on the free cash flow line in their recent reporting. YouTube and Google Cloud are even more attractive than they appeared at first. And Alphabet is now one of the biggest mega stocks that has one of the longest runways. So currently trading 2701, and we have a price target here of 3150, a 12-month price target. Unlike some of the other mega tech stocks, this has a number of weapons that they can use. About 3/4 of the revenue actually comes from the advertising, but their Google Cloud has done phenomenally well, and then they also have the YouTube, so they just have a number of horses involved in the race. So this is one of our favorites. So thanks very much for your question.
Thanks indeed for that question. Let's go to Windsor, Ontario now, where Dean is on the line. Hi, Dean.
I just have a question with regards to Activision and his views with the current lawsuit and everything that's going on and the drop in price and with a 10-year target on it. Thanks.
Thanks very much from Windsor. Paul, I'm just looking for the ATVI where it's currently trading, and it's currently
81.74.
Yeah, 81.74. So we have a price target of $97.75. So it's still a very, very decent runway ahead of it. We don't own it actually over in the fund, but we have it in some of these separately managed accounts. So they had some issue, which actually, drove the stock down. Some litigations issue because of a sort of a toxic culture there that was very sort of chauvinist and so on, and they actually had I think it was last week where a number of employees walked out, and it drove down the stock, 6-7%, but then they just reported. Great reporting on both the top and the bottom lines. Their flagship franchises of Call of Duty and World of Warcraft and Candy Crush, it makes them the world's largest third-party video game publisher, and it's certainly the place to be involved. I mentioned before one of the places that were light within the fund was actually in the gaming side. So I wish we actually had it, but at least we have it over in some of the separately managed accounts. So, that litigation is still there, but they seem to be firing on all cylinders. So not only on the supply side are they servicing it, but on the demand side is very, very, very strong. I hope that helps.
Let's go to Michael in Vancouver as our next caller. Michael, thank you for your call.
Paul, thank you very much. Kim, thanks so much for taking my call. Kim, my question is on Alibaba and I guess the whole climate of any of the Chinese tech stocks. I just wondered where you stand on that. Do you own it? Do you recommend it? And if you have a moment, could you comment, please, on even if one of your stocks is in your top 5, as you mentioned with Google and Microsoft, do you have a ceiling as to the amount of weight a certain stock can have in your fund? I'll hang up and listen to your response. Thanks, fellas, and have yourselves a great day. Bye-bye.
Great question. Thank you. It's controversial, right? So just to answer the second part, we never hold more than 6% of a single stock within the portfolio. So once it gets up to 5%, we start to actually take some money off the table. Just as the fund has started to grow, there are lots of other stocks on our watch list and our shopping list. So we don't go over 6%. Before it used to be 10%, but we brought it down to 6%. Alibaba, Alibaba, whether you look at Alibaba or Baidu or JD or Tencent, these companies have the longest runway out there for all the analysts, including ourselves. And, Alibaba is like the king of e-commerce over in China. It's the leading e-commerce platform. Market share is 62%. Followed up by Pinduoduo and JD. And we brought our price target down to $298 from $340. But 2 weeks ago, we actually let all of our Chinese stocks go, just before the shoe dropped when it came to the tutoring stocks over in Japan. So we I was going to say regrettably, but we really like these companies of JD and Alibaba and Tencent. Mind you, that's in the fund. In some of the separately managed accounts, some of our clients wanted to keep it. And Alibaba got when that whole tutoring regulation came down on the tutoring industry and then over into the gaming industry, Alibaba was trading, sort of in that band between 200 and 230. And then it sort of stretched all the way down to about 180 and sort of come back to this 200 level. The last thing I'll say about it, not until the dust settles will we weigh back in. Because right now, I sort of look at this as sort of being dead money. It's difficult for these stocks to move higher when you have this regulatory enforcement on top of it. But when that dust settles, it's going to be a great opportunity. So as quick as we got out, we'll be quick to get back in. And hopefully that helps.
That's Kim Bolton on Alibaba and the Chinese tech stocks. We'll take a break, but be back after this break with more questions to Kim Bolton. Our number again, 1-855-326-6266. See you after this break. Welcome back to Market Call. Kim Bolton, of course, is our guest today. Tech stocks are the theme. And Andrew in Mississauga is our next caller. Andrew, thanks for calling.
Oh, thank you for taking my call. Good afternoon, Paul, and thank you, Kim, for taking my call. It's on PagerDuty. I wanted to get your input on where you feel this stock might be in about 5 years' time. I've been holding it for about a year. It's been up and down like a yo-yo. It's pretty well flat over the year at this point. And I just wanted to get your input on where you feel that might be going in over the next 5 years. I'll hang up and listen to your answer. Thank you so much for taking my call again. Have a good afternoon.
Thanks, Andrew. Future of PagerDuty in 5 years. I can hardly figure out where it's going to be next month, but certainly on 1 year target for PagerDuty, and it's currently trading at 42.55, I think. We have a 12-month price target of 47.50. So I'll just quickly back up. It was founded back in 2009 here in Toronto. now based out of San Francisco. Now, this is again involved in that cloud stack, and it's a cloud-based software solution company which provides monitoring services for digital infrastructure, for incident reporting and event intelligence and data analytics. One of the problems with PagerDuty is that there's a lot of competition. They've targeted the right industries of retail and financial service, healthcare, government, and so on. You're right. It's had quite a ride. It was $60 back in July of 2019. And then it went to $12 in March of last year, and here we are at 42. So if you're willing to hang in there, we have, I guess, about a 10-12% lift from here over 12 months. Thanks very much, Andrew.
Thanks for the call. We will take a break. Top picks are coming up just around the corner. Welcome back to Market Call. Time now for top picks from Kim Bolton. Kim, we're going to move fairly briskly through the three of these, about 60 seconds per stock. Number one is ServiceNow, ticker symbol NOW on the New York Stock Exchange.
Thanks, Paul. I'll keep to the time. ServiceNow. Remember that Andrew previously was asking about PagerDuty, and I said there's a lot of competition. Well, this is the king when it comes to cloud computing program that manages digital workflows and enterprise operations when it comes to incident and problem and change IT operational events. This is the king. This is going to be the next Salesforce type company out there. They just went through and they beat on all metrics on their Q2, currently trading right here at 588. I would buy some here, add some down at 560 and 540. We have a $660 12-month price target.
Number two, Upstart Holdings, ticker symbol UPST on the NASDAQ. Upstart.
Yep. So currently trading at 127. We got and we own all of these personally and also in the fund and in our separately managed accounts. So currently trading 127. Got a 12-month price target of 145. It's a very cool company that's a revolutionary data analytics solutions for the banking system. And basically what they have are these proprietary AI tools that they sell to the banks for actually being better at going through the credit worthiness of candidates for personal loans and auto loans. It actually has proven to bring down default rates by 175%. Banks love it. Institutional players like it. So we like this. We like our Upstart.
Okay, and last one is Fiverr International, ticker symbol FVRR on the New York Stock Exchange.
Yep. So Fiverr is an online platform that allows buyers and sellers to connect so they can buy and sell digital services. Now, you're probably wondering about the name. So it gets its name from the starting price of its services, which is $5. So it's a two-sided marketplace that enables flexibility and remote work. So it was in high demand for the COVID. But it's now the leading freelance platform. It's got 3.8 million active buyers in 500 categories. And it just enjoys considerable advantages over its competition, the scale and network effects. Fiverr is definitely going to be a much bigger company in the future. So I'd buy it here. It's right now about 127, maybe add to it down at 210 and 190 with a stop down at 175, 180. Did I keep to the time there, Paul?
Yeah, I think you did a pretty good job there, Kim. Thanks a great deal. We'll just take a little more time to review those top picks. Top pick number one was let me get my page here. Let's bring that board up. Top pick number one was ServiceNow was top pick number one. He has a $660 price target on that stock, ticker symbol NOW on the New York Stock Exchange. Top pick number two, Upstart Holdings, UPST. He's got a price target on that one of $145.45 US. And top pick number three is Fiverr International, ticker symbol FVRR. Price target on that one, $290.85. We say thank you to Kim Bolton for all his comments and answers today. In particular, we say thank you to all those callers and email writers who took the time to put a question to Kim Bolton. Thank you so much. Just before we turn things over to Amanda Lang and Bloomberg Markets, we will take a look at the markets and see how they are trading. We haven't had a close look at them for the past hour or so. There's the Dow Jones Industrial Average down by 290 points and change, or 0.8 of a percentage point. 34,825 is the level of the Dow. Not far off, of course, an all-time record high, but further off than it was at the open of trade this morning. The S&P 500, which did close yesterday at an all-time high record, closing value, down 16 points or 1/3 of a percentage point today. And the NASDAQ Composite, home of many of the tech stocks that we've been talking about on this program, up by 8/100ths of a percentage point. That's it for us on Market Calls. Thank you so much for watching. Amanda Lang and Bloomberg Markets are just around the corner.